This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on August the 3rd, 2012. Our time is 8:42 Mountain, 10:42 Eastern. Radio show runs on AM 640 in Toronto, 630 CHED Edmonton, QR 77 in Calgary. If you ever miss a radio show, they are archived on Harold's websites, rarecoloreddiamonds.com and HESradio.com. You can also sign up for our podcast. Our show is portable via iTunes. To invest in precious metals, there's only one company Harold recommends you use. That is Worldwide Precious Metals. Their website, wwpmc.com. You can connect with them at 1-866-623-2002. And you can ask them about signing up for our free weekly newsletter we send out via email free of charge. As we start the show this week, U.S. job numbers out. Unemployment rate in the United States went up to 8.3% from 8.2%. They had been expecting around 100 to 125,000 jobs. They got 163, and you would think that it was a grand slam home run. The cheerleading was simply amazing, but keep this in mind. 41 straight months above 8%. Longest stretch on record. 150,000 people dropped from the workforce. Not good at all. But you can see how desperate they are for good news. Even a brutal number is actually considered good. Also this week, before we get to Harold's commentary, the Fed and the EU disappointed. People were hoping that they would come in and do some stimulus. The thought is now it will probably come in the fall at some point. But people were disappointed because they're looking for action, not talk. And right now, Harold, there seems to be a lot of talk, no action from those that are pulling the money levers. And this number this morning astounds me that people would think that is fantastic news, because at those levels, even if you're adding 163,000 jobs, you're not even treading water. It's not a very good number at all.
No, it isn't. And the rate and the unemployment rate went up to 8.3%. So again, it's not a good thing, and obviously that's the major focal point of the political commercials at this point here is, how bad his record is. This is the worst recovery in U.S. history, and again, if this is the best that they can make it look like, you can only imagine what's going to happen next year after the elections. All in all, it was a lethargic week. Again, we wanted to see gold get above 6.25. It's a very important number. We got close to it, then the markets fell off during the week. It was a up and down type of week. Friday, as we're taping the show, gold's much stronger. We're trading back up to 1,600. Again, to get to 16.25, it's an important number. We'd like to see two closes above 16.25 for gold to go higher, and I do believe that is going to happen and happen fairly quickly. Silver had a couple closes above $28, but again, we want to see this market really start to take off, and that's not going to happen until gold takes off also. But again, the market is holding in very strong. We're up 50 cents in silver. As we speak, we're up $10 in gold, and silver is very close to the $28 level. Oil's up very heavily today. Oil's up $3.53, trading above $90 at $90.66. U.S. dollar was down heavily today, down 62 points, is trading at 82.69. The danger level for the U.S. dollar is 84 cents. So we're about a penny 30 away from that. And again, if it wasn't for the euro, there is no way that the U.S. dollar would be this strong at this time. However, gold and the U.S. dollar tend, and I do say tend, to go in opposite directions, but there will be a time in the foreseeable near future that the U.S. dollar and gold will head in the same direction. They will separate themselves from each other, and it will become a non-event. So all in all, again, we need to see gold break above 16.25. That would make me very happy. We're at 16.04 today. I'd like to see silver get to the $30 to $32 level and have a couple closes above that. That would help the silver market tremendously. And again, oil is a raging bull. There's no way that oil is not going higher. Right now it's political, so with the elections coming up, they're trying to keep the price of crude oil down, but there's no way in the world that that's going to happen because crude is in great demand and there are shortages, believe it or not, in the crude oil market. And one of my top recommendations is to own crude for the long term. It's an extremely volatile market, as is every market at this point, and there's just no doubt in my mind that the world needs more oil. There's less and less of it around. China's a big player, and the fact is that oil is going to $150 at least. And now you've got major rumblings in the Middle East with Iran again, and again, that's only going to push the price of oil higher. The Canadian dollar is very strong. It's basically even with the U.S. dollar at this particular point. You've got a major drought going on in the Midwestern part of the United States. That's going to be good for Canada as far as selling our excess corn, wheat and soybeans, but the problem is that this is going to take a major hit on the markets in the U.S., and the fact is it's very, very inflationary. The higher food costs go up, the more inflation goes up. I know that, you know, the way that the governments really predict or look at the statistics for inflation don't match up with what I look at and what most people would logically look at inflation. If the cost of living is going higher, if oil is going higher and the cost of food is going higher, that's inflation in the broadest sense, and that's what we look at. If you're making X amount of dollars and your cost of living is going up, then that's inflationary, and you've got to make your money in some other way in order to compensate for inflation. That's where gold, silver, diamonds, oil comes in. And the fact is that gold and silver will take off. It's been a slow summer, but that's not unusual. Summer is normally slow for the gold and silver markets. Going into the fall, we're going to see some strong rallies, and the closer we get to the elections, the more and more I think that these markets are going to strengthen. You know, we've still got the rest of the summer and the end of the year to see these markets go, and we're not that far from the all-time highs in gold. Gold's been as high as 1,900. We're trading at 1,600. I'll tell you, that gap could be closed in a month. So given the right situations, and the right situations are out there, because fundamentally this market is much stronger than it is technically. You've got Wall Street on one hand, you know, beating the drums that things are looking better, and I can assure you, I'm a Canadian living in the United States, it's not getting better. The middle class is getting absolutely hammered in the United States. Once the home values dropped and they lost their money in the stock market, there's no chance of recovery because the job markets in the United States are almost nil. So the fact is that I haven't changed my way of looking at the markets, even though we've been in a sideways to down market in gold and silver for the last 10 months. It's been a boring 10 months, let's face it. But the bottom line is that the market is not hurt. It's still trading within its range at the lower end, but it's still in a very bullish stance, and it would not take very much for this gold and silver market to take off and fly. So basically, I love the gold and silver market. I think over the next 5 years, we're going to see substantially higher prices than we're seeing right now. And again, we're going through a period of confusion. That's the best way that I can put it. You've got Europe falling apart, and one day they're going to bail them out. The next day it's not going to work, and going back and forth type of thing is just not helping the market at all. One day the dollar's strong, the next day the dollar's weak. One day the euro's strong, the next day the euro's weak. So we have no we have no strength in those markets at all, and that is going to change. And again, the closer we get to the elections being over, you're going to see that these markets are going to take off and run. There is no way that we're not going to have massive inflation going forward. With a weakness in the currency markets, these countries are going to have to reinflate their economies, and we know what that's going to do to certain markets. Gold and silver will reach their highest levels on inflation, and that is coming, and it's going to come like a freight train. So the bottom line is that silver was at $50. It's now at $27. It's almost half of it was at its high. So basically, if the fundamentals in the market are the same, silver is a screaming buy at this point, and I still love silver over any of the commodity markets, but I love the gold market and oil. Those are the three areas in commodities that I think that we can depend on for at least the next 5 years, and I do believe the markets are going to go substantially higher. So again, we're not in any trouble in the markets at all. Again, we're trading in a range. I'd love to see this market break out, and it eventually will, but at this point here, we need to see 2 closes above 16 and a quarter. We'd like to see the silver market get above $32. Oil's back up heavily today. I'd like to see it get back up to 100. And then again, I do feel over the next year we will see crude oil trading at around the $150 level unless something strong happens in Iran, and then it could go even higher than that. Love the diamond market. There's some very, very important news coming out on diamonds this week also. You want to be in all the inflationary hard assets. Gold, silver, and diamonds, along with other assets, will get you through these extremely difficult times, and believe me, those difficult times are coming. I sit and read reports till they're coming out of my ears every day. I might get 30, 40, 50 different reports on the economy. Most of them I discount, but there are some that are very, very well written and quite concerning. And you've got some of the most brilliant minds in the world, people much, much smarter than myself, that are saying things that are very, very concerning. And, you know, the fact is that you still go into restaurants and the restaurants are busy, and, you know, you look at what's happening and you say, well, gee, things don't seem all that bad. What really is coming, and again, according to some of the major experts in the world, they're saying that potential Armageddon is coming in the financial markets. Is it possible? Yes, it's possible. We saw it back in the 30s. The fact is that greed and stupidity has been the cause of all this, and that started back in the 1990s, and we're paying for it today. But we're still with the same recommendations because those are the recommendations that make sense. Gold should go substantially higher and will go substantially higher as the fundamentals get stronger and once we break out of this trading range. The same for silver, the same for oil, and the same for all the commodity markets that are inflationary. So, again, at this point, silver at $27 below $28 is a tremendous buy. We will see a repeat of the $50 market and probably at least double that moving forward.
The telephone number to invest in precious metals. The one company Harold recommends you use. They've been in business for 10 years. They have 10th anniversary incentives. You can go to their website, www.pmc.com, and find out more. Give them a call. Let them educate you about investing in precious metals. Their name is Worldwide Precious Metals. 1-866-623-2002. The website is www.pmc.com. We have our free weekly newsletter we send out via email. They'll be happy to get your name on the list. This week we have our charts of the week, and our chart is from Casey Research, the U.S. dollar since the founding of the Fed. And if you take a look at this chart, the dollar has dropped to only 0.04 worth since the founding of the Fed. So going from $1 to 0.04, and you can see that chart that goes back to around 1914. We also have quotes and quick hits, information on diamonds, gold, silver, QE3, the Fed, sovereign debt crisis, U.S. debt and deficit problems, the stock market. There was some turmoil there with a company called Knight. May get a chance to touch on that later in the show. Also, oil and nat gas, real estate, and geopolitical. We haven't touched on geopolitical in quite some time, but this week the president of Iran is calling for the annihilation of Israel. The Israeli prime minister saying time is running out to stop Iran's nuclear program. And the United States and Israel are intensifying talks on Iranian options as well. Russia wants naval bases abroad. So the geopolitical aspect is another reason to have hard assets in your portfolio. Some of the quotes from this week that really you want to take a look at further, get our newsletter. You can delve further into the stories the quotes come from. John Embry said, I think that this rally that we've seen in the U.S. stock market is somewhat preposterous. It's all premised on more QE, and I don't think QE is going to do anything for the state of the economy. But it will eventually create a great deal more inflation. I think at some point we will see a violent correction in the stock market. A lot of people investing in the general stock market because they believe everything is fine, but they will be very surprised that this correction is going to happen, and it could be very, very violent. Also, Charles Biederman, he's the CEO and founder of Trim Tabs. We've talked about him before. He says the fundamental problem in Europe is that the economies there are not generating enough taxable revenues to meet current bills. let alone grow future entitlements, and let alone the huge stack of already molding debt that exists. In the face of that, he says, really all they can do is talk. Now, the head of the EU's central bank, Mario Draghi, he had been talking a good game here over the last couple of weeks, and people were very disappointed when they did not live up to what they were saying. That was the same for the Fed in the United States. James Turk said this week, the 800-pound gorilla in the room is that the U.S. government's horrendous deficits and addiction to debt continue. The Fed is keeping interest rates low to sustain the illusion that the U.S. government is solvent, while hoping that low rates will also jumpstart the U.S. economy and thereby increase federal tax revenue to service the mountain of debt. But despite all the money printing from the Fed from buying government paper, the economy remains in the doldrums. So the U.S. government's financial position is becoming increasingly precarious. That's why the U.S. lost its AAA status. We should expect another downgrade soon. Just as that is going to happen, you've got problems in Europe as well, and we've seen all the serial downgrades there. James Turk believes that gold and silver will skyrocket when we see another U.S. downgrade. One of the stories we touched on a few weeks ago was about John Hilsenrath, and he works for the Wall Street Journal. He is tied in very closely with the Fed. He actually said the world central banks are on red alert, and he's talking about the Fed and the ECB. They're on red alert over the state of the U.S. economy. Ben Bernanke and Mario Draghi, with words, not obviously words so far, but not actions, demonstrated this week they're on red alert. But expectations are now high that the Fed and the EU will act soon to address those worries. And they both face imminent tactical and political challenges, and neither has a handbook to follow. Hilsenrath also said in the Wall Street Journal that the Fed is ready to roll more stimulus. Art Cashin, a well-known stock trader, you probably have seen him interviewed on Bloomberg or CNBC or the Canadian Business Channel. He says current liquidity in the system risks hyperinflation. One of the top stories that we have this week in our newsletter, and it's a story from Elf Fields. Elf Fields put together a commentary, and he is highly respected and regarded by Jim Sinclair, one of the top minds in gold and silver. He said, "What happened to gold?" And it's part 2 of a series that he's done. He actually goes on to say in this interview, and actually this story, the bottom line is now we have a real strong probability that the correction that started at 1930 on August 23, 2011 has been completed both in terms of Elliott waves and also in terms of time elapsed. If this is correct, the gold price soon should be expressing itself in violent upside action as it moves into the third wave, which is going to be targeting $4,500. That is a must-read article from Elf Fields, What Happened to Gold, Part 2. Harold, we also have Stephen Lieb from Lieb Capital Management saying, I'm on record as saying we're going to 5,000 to 10,000, but, gold may even go higher. Civilizations have come and gone. Paper money has come and gone, but gold and silver have remained money for 5,000 years. Gold and silver are in a very strong bull market and should remain there for many years to come. Also, Egon von Greyers, who's a money manager out of Switzerland, all of the assets which have been inflated by the credit bubble will implode. That means tens of trillions of dollars of wealth would disappear out of the world economy. As example, stocks will have to decline 90% versus gold. We also know the bond market is in a massive bubble, and I believe interest rates are headed to 15% to 20% in the next few years. Bonds will absolutely implode. So we are back to physical gold, which is the only investment that eliminates counterparty risks. We're talking about having physical gold. Also, Michael Pinto said this week, you must be ready to deploy a good portion of your assets into precious metals. And he also mentions energy and agriculture. Once the Fed and ECB follow through on their threats to take even greater steps to destroy their currencies, from all available evidence, that day cannot be far away. People need to protect themselves by being in the hard asset market. Harold, it's a time for hard assets, and we're hearing that from many, many smart minds. I think the whole crux of what we're saying and have been saying for a long time, and we have about 3 minutes left in our segment here, is people need to maintain their purchasing power. Now, we have inflation eating away at our paper assets. Inflation, obviously, the reported number around 2-3%. You have John Williams from Shadowstat saying it's much higher, possibly anywhere from 8 to 9 to 10%. Our money is being eaten at by a cancer, a financial cancer called inflation. And then on top of it, you need to be making a little bit of money to put some money in your pocket. The thing that will do that, we believe, is hard assets, not the paper asset market.
You're right, Randy. And again, I believe that he's 100% correct in the inflationary aspect and the fact that we're going to see over 15% interest rates again. So those are things that are going to come as a result of inflation. 2% inflation in this market is ridiculous. Again, we don't believe that number. Nobody with any sense believes that number. It's got to be over 6 or 8%, and it's going to go substantially higher. And that's another reason why gold is trading at $1,600, because inflation is a major factor. So they can play with the numbers all they want. The bottom line is that one of these days in the foreseeable near future, these markets are going to react big time to what the real news is. And that's high inflation, a weak U.S. dollar, and again, struggling currencies. So I believe that what he's saying is true. I do believe that gold eventually will be a $4,000 to $5,000 metal or higher. And again, if you're looking at it now at $1,300 in that area, it's a phenomenal buy, and that could really push silver up to $200. And with silver at $27, $28, you can see that silver will make the most amount of money out of the two metals.
The telephone number to invest in precious metals. The company Harold recommends you use Worldwide Precious Metals. Their telephone number, 1-866-623-2002, website www.pmc.com. Speak with them about investing and starting your own precious metals investment account today. On the silver side of things, Tom Fitzpatrick, who's with Citigroup, said this week, if silver can get some momentum going to the upside, then we would look at the possibility of testing the top of this triangle again around 32.70, and more importantly, just below 38. If silver can clear 38, that would give us the dynamic to see silver move to $50. We believe this is going to happen. You can read the full story in our newsletter. Get the newsletter from Worldwide. Also, Morris Hubbard out of Vancouver saying, silver is my favorite asset to hold for the long term. Seasonally, this is an excellent time of the year to add to your positions, especially at these price levels. Commercial investors have bought this market heavily 5 times since the correction started. They clearly have incredible confidence that the price of silver is going higher. Also coming out this week from the Got Gold report from Gene Ahrensberg, he actually goes on record as saying that right now there's a huge short position in silver. Also, Dan Norsini coming out and saying there's a huge short position in silver. They believe that the silver shorts are going to get caught short, and they're going to have to cover, and we could see a real explosion in the silver market. Read those stories in our newsletter. Speak with Worldwide Precious Metals. Go to their website, learn more about them, www.pmc.com. Speak with them about starting your own precious metals investment account. The telephone number, 1-866-623-2002. We'll come back and talk about diamonds. Some strong stories about diamonds this week as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on August the 3rd, 2012. Our time is 9:07 Mountain, 11:07 Eastern. Radio show runs QR77 Calgary, 630 CHED Edmonton, and AM 640 in Toronto. You can listen to our radio show online. They are archived on Harold's websites, rarecoloreddiamonds.com, also HESradio.com. You can sign up for our podcast through iTunes. Our radio show is portable. We can go anywhere you are. Don't forget, as well, Harold has another website. He'll talk about it here shortly, hsfineauctions.com. And as we get closer to the fall, we will have more auctions, and we will announce those as we get closer to the fall and we start auctioning again. The company Harold recommends you use to invest in precious metals, their name, Worldwide Precious Metals, a Canadian company in business for over 10 years. It's their 10th anniversary. They have 10th anniversary incentives. Speak with them. Let them educate you. They're the experts in this very specialized market. Give them a call. Let them educate you about starting your own precious metals investment account today. You need an allocation of hard assets in your portfolio at all times. 1-866-623-2002 is the number to call. They'll be more than happy to help you. Let them earn your business. Their website is www.pmc.com. Harold's website for diamonds is rarecoloreddiamonds.com, rarecoloreddiamonds.com. The telephone number 1-800-432-1022, 1-800-432-1022. And as I mentioned, his website for auctions, hsfineauctions.com. You can go and take a look at some of the auctions that we've had over the last year and the items that have been auctioned off. One thing we do weekly is our featured diamond of the week. And this week, we don't have a colored diamond, but we have a spectacular white diamond that is the rarest of the rare. The featured diamond is a 1.23 brown, brilliant cut D flawless, white, internally flawless diamond. You can see the video on Harold's website. It is absolutely stunning. Harold, this is the type of diamond you see in the movies. Somebody gets engaged in the movie, maybe it's Jennifer Aniston or some Hollywood star, and this is the type of diamond that they put on the Hollywood starlet's finger. It is a stunning, stunning diamond.
You better believe it. And you've got to view the GIA report to understand how amazing this diamond really is, because it's triple excellent. So if you look at the GIA report, which is listed, it was actually graded by GIA on February the 8th, 2012, so I'm the first owner of this diamond. It's laser inscribed and registered because it's such an important diamond. The cutting style is round brilliant, which is the most difficult diamond to cut, and consequently can be, in color diamonds, double the price of any other diamond. The carat weight is 1.23. The color grade is D. So in white diamonds, which is different than color diamonds, D means colorless. It's the best that you can possibly get. And then flawless is obviously the best clarity that you can get. And then look at the cut, the polish, and the symmetry. It's all excellent. So it's actually called a triple X diamond. There's no fluorescence. It actually appears blue with some light, and the fact is that it represents 0.001% of the diamond market. So where my main business, as everybody knows, is colored diamonds, the reason that I have brought these D flawlesses to the market is because they're such important diamonds. Last year, D flawless whites went up by 45%. So you're talking about the most sought-after white diamonds in the world. They're extremely rare. They're nearly impossible to get, especially the triple X, and the fact is they do nothing but go up in value. So I own 100 D flawless white diamonds. I've collected them for many, many years. They're very, very valuable. They go up tremendously in value, and some of them, like this one, are priced on the lines of pinks. So again, you're talking about a diamond that is extremely rare and obviously very beautiful, and to get one that is round and brilliant is nearly impossible. So that diamond is exceedingly rare. It's one of the most beautiful diamonds you'll ever see, and it's a phenomenal investment. So I own 100 D flawless white diamonds, probably more than anybody in the industry. But again, there's certain diamonds that do extremely well, and that's where I put my money, and that's where I'm recommending that you do the same. These diamonds never, ever fall in price. They're so difficult to get and so rare that, again, they represent, as I mentioned before, 0.001% of the market. And any time that you can buy the very, very best, you're always going to get the most back for it. So we put this diamond up as an extremely rare diamond. It certainly is not an inexpensive diamond. It's slightly under $100,000, but it is one of the most beautiful investment diamonds you'll ever see. We also recommend very, very heavily the yellow flawless diamonds, fancy yellows, fancy intense yellows, and fancy vivid yellows. And we also carry some fancy light yellows that are really magnificent, very soft, beautiful yellows. Those diamonds are in the $15,000 range. The fancy yellows are in the $20,000 to $25,000 range, depending on the carat weight. The intense yellow diamonds are in the $30,000 range and up, and then the vivids, which are the highest color grade given by GIA, those can be over 50, 60, 70, 80,000 a carat, depending on how strong the color is. So the fact is that if you are going to invest in yellow diamonds, there's a lot of yellow diamonds around that are not flawless. You do not want to invest in anything that is not flawless. If the diamond is not flawless in yellow, it's common, it's nice jewelry, but you will never ever make money with it. So it's imperative that you understand that there's certain diamonds that have track records that we've been trading in for many, many years now. Back in 1980, you could have bought a yellow flawless diamond, a fancy yellow 1-carat rating cut diamond for about $500. Now that same diamond is $20,000. Obviously been a fantastic investment, and those diamonds go up by 25% a year. They double every 4 years in price, but the exciting thing is during times of high inflation, those are the diamonds that did as well, if not better than gold did, and went up 500% in 2 years. And you all know how I feel about inflation. There's no way that we're not going to have massive inflation. That's why I've invested so heavily in flawless yellows and argyle pinks and green diamonds and these deep flawlesses, because that's where most of the money is going to be made. Now, these diamonds don't trade on exchanges like gold and stocks and oil and corn and those type of things, so they don't go down in value. The fact is that they're so rare and they're so difficult to get that the supply and demand scenario alone makes the prices of these diamonds go higher. For most of my clients that buy these diamonds and invest in them for the long term, they buy them for retirement. You buy them now, a diamond for $20,000. In 10 years from now, that diamond is going to be worth close to $100,000. There's very few other assets in this type of economy that can say the same thing. We also love the argyle pink diamonds. 95% of the pink diamonds in the world come from one mine in Australia, and that mine is about to close in 2018, which is only 6 years from now. Give it 2 years for the diamonds to run out, so in 8 years from now, a diamond that you could buy for $50,000 could easily be a $400,000 or $500,000 diamond. I don't know of any other investments at this time that can give you those type of returns with this type of safety. The fact is, it's not a short-term investment. You don't want to buy a diamond today and sell it a year from now. You're not going to make any money. The fact is that you want to put these diamonds away for 5, 10, 15, 20 years. I bought diamonds for my children when they were growing up, and after 20 years, my son bought his first home built based on a diamond that my wife and I gave him. My 3 young grandchildren all own diamonds that we put away for their future. So again, it's a different world right now. It's not the 90s anymore when the dollar was strong and the U.S. economy was strong and the stock market was strong and you could make money in the stock market and real estate. Those days are over. The fact is that if you're dealing in stocks and real estate, it's no longer safe investments. It's very speculative and risky. The commodity markets are risky. Look at the huge swings in the commodity markets. You've got corn skyrocketing on drought fears. You've got oil up $3 one day and down $2 the next. You got all these markets that are extremely volatile. But diamonds aren't like that. Diamonds are just a very safe, quiet investment. The Europeans call it real estate in your pocket. You could literally walk around with $1 million diamond on your wife's finger in the pocket of your jeans, and nobody would even know it. But the fact is that it's the most important asset to own at this particular time because it's a hard asset that you hold on you. And the fact is that if things get as bad as some people are saying it could get, and definitely, the chances are is that the economy around the world is going to get much worse than what it is right now. We need insurance. We need to be able to protect ourselves just in case these things happen. And the fact is that if you put a diamond away for your future for the next 5 to 10 years, you're going to make some money with it, and you're going to be able to protect your assets. And that's what this show is all about, is for the small investor to be able to do the things that he and she is going to need to do to survive the next 10 years. And the next 10 years, who knows where that's going to lead us to? It's total uncertainty, but in my mind, we're going to see high inflation, destruction of certain currencies. Some countries are going to go bankrupt, and again, I wouldn't want to own the currency that is going to go under. I would like to own a diamond or several diamonds that could be sold in Japanese yens or British pounds or euros or Chinese yuans or whatever the strongest currency is. We have many European investors that are buying our diamonds because our diamonds are priced in U.S. dollars and the British pound is at 165 compared to the dollar at $1. So they're picking up 65% on their currency. And that's what we're going to do for our clients when we sell these diamonds. We're going to sell these diamonds in the area where the currency is going to put more money in your pocket. The other thing is, the only stigma involved with diamonds is that everybody knows they're a good investment. I mean, all you have to do is if you've been married 20, 25 years and you bought your wife a diamond ring and you know what you paid for it 25 years ago, if you take it in now to be appraised, even if it's only a white diamond, that diamond has gone up substantially from where you bought it. So you can imagine that if your diamond from 25 years, just a common, white diamond, would go up 2 or 3 times what you paid for it, can you imagine what an extremely rare investment diamond would do? So diamonds have always been a great investment, but the stigma attached to them is, how do I sell them? If I go back to the jeweler that I bought it from, there's no way that he's going to give me what that diamond is worth. If I put it in the newspaper or take it to a pawn shop or whatever, you're going to get killed on that because they're going to try to take advantage of you. And I've seen that happen many, many times. And us realizing that this is what the problem was with the diamond market, we set out to create the secondary market to resell your diamonds and high-end collectibles for you. So we created 8 Siegel Fine Auctions, an online auction website that deals in rare colored diamonds. It's the only one of its kind in the world. It took me 2 years to build, hundreds of thousands of dollars, and the fact is I built it for you, our clients, our listeners, to resell their diamonds because nothing like this ever existed. And the fact is that that's why diamonds have never really been considered that type of investment, because there was never a way to sell it. But now we have a way to sell it, and we've had 7 auctions thus far, and all have been extremely successful. Many of the auctions that we've had, we've sold 100% of our items. We've sold beautiful gold and silver and platinum coin sets from South Africa and from all over the world that have gone up tremendously for our clients. We've sold emeralds, rubies, and sapphires that defy description. We sold Oprah Winfrey's pink diamond necklace. And again, for a brand new company that's just developing itself in the market, the top diamond that we sold last year was for $150,000. So again, it's a phenomenal business for us. We built this for our clients, and we build our business on results. So when our clients buy a diamond or invest in a diamond through my company, Rare Color Diamonds, and if you sell it through us through 8 Siegel Fine Auctions, we take 10% of the profit only. So if we don't do well for you, we don't do well for ourselves. And again, I didn't go into this business and build these amazing businesses just to break even. So the fact is, I want my clients to do well, and I want my companies to do well, and so far, that's what seems to be happening. Now again, most are not selling their diamonds at this point. This is the time to buy them, because the prices are still very good. Over the next 5 to 10 years, you could see these diamonds go up 5 times what we're looking at right now, due to shortages and due to inflation. And there is no doubt that interest rates are going back up to 10, 15, 20%. They're going to have to in order for the countries to reinflate their economy. And we'll be there with gold and diamonds to capture all the money when this thing hits. So, again, my strongest recommendations are to look at our loose diamond section. Go to the Yellow Flawlesses. They start at $15,000. I understand $15,000 is an awful lot of money, and this is not for everybody. And you don't invest all of your money in one asset. And basically, again, if you can't afford to trade in the diamond market in the right way, then it probably isn't the right market for you. It isn't for everybody. But the bottom line is that a $20,000 diamond today, a Yellow Flawless, could easily be $100,000 in the next 5 to 10 years if inflation hits the way that I feel. We've got a beautiful website with museum quality pieces. We have the most beautiful Argyle pink diamonds just coming in that have just been cut that are going to take your breath away. Argyle pinks can increase 10 times what today's prices are. It means a $50,000 diamond could be $500,000 when the mine closes and these diamonds run out. And we are the only company that can resell diamonds for you. So if you are buying diamonds through other firms, and let's face it, competition is good. There's a Wendy's, McDonald's, and Burger King on almost every corner. Just make certain that those companies can resell your diamonds for you, because in most cases, my company cuts 90% of the flawless yellow diamonds. That's why we have yellow flawless diamonds, and nobody else really does. And those that do have bought the diamonds that we rejected. There are different colors and different levels of colors. A diamond can be considered a fancy intense yellow, but it can be graded on a scale from 1 to 10. And if it's not on the higher numbers, we take a pass on it and sell that off. So again, we only offer the very best because we have to resell that diamond for you. And if we don't make money on that diamond, you're going to be disappointed and we're going to be disappointed because we just wasted each other's time. So far, that has not happened. Clients that have invested with us have done extremely well. I've been in business over 35 years. I know the financial markets as well as anybody. I've been in the commodity business for over 35 years and know the markets fairly well. But my true love is diamonds. I started off as a collector, and now I'm amongst the largest dealers in the colored diamond market. I actually created the investment scenario of rare colored diamonds. And the fact is, it never really existed until our company realized that it's a phenomenal market, and all we had to do was create the secondary market to resell it. And the reason that we were able to do that is because of you, our listeners. We have such a large following, and our clients have done well with us over the last 20, 25 years, and now it's spread worldwide. So we have clients all over Canada, United States, and throughout Europe. And now these European clients, because of the currency, are just buying up all of our diamonds at a discount. So again, it's one of the best investments you can make, especially during these uncertain times. If we believe in insurance on our car, our home, our life, our health, and everything else, buy a diamond, put it away for insurance purposes on your financial future, because it could literally save your financial life. And I'll tell you, at 25% a year that these diamonds tend to increase, you tell me any other investment that increases by 25% with absolutely no risk. Put some money into diamonds. You don't put all of your money into it, but put a certain amount in there, and again, you're going to do extremely well. By the way, our new newsletter for diamonds have come out this week, so it's free to all of the listeners to our show. If you would like to sign up for our free diamond newsletter, it's going to come out once a month. The first issue is coming out this month, so please give us a call or go to rarecoloreddiamonds.com and sign up for our new newsletter. Also, we want to educate you on diamonds. Investing in diamonds is not as simple as it sounds, so we want to educate you. We want to give you all the information you need to make an intelligent decision. So go to our investment seminar section of rarecoloreddiamonds.com. It's 100% free. All you have to do is sign up for it and be qualified. Again, the minimum investment is $15,000. So if you can invest at least $15,000, don't take a pass on it. But we will do a beautiful seminar for you online, one-on-one or a group, whatever you prefer, and it takes about an hour, and we will go through the entire diamond scenario with you, how to read a GIA report, where diamonds come from, how to grade diamonds, everything like that is in this seminar, how to cut a diamond, the whole thing, and we'll show you all about colors and what colors are worth more and what cuts are worth more and everything, give you all the information you need to make an intelligent business decision. So sign up for a free seminar, sign up for our new diamond newsletter, which is going to come out once a month. It's going to have auction results and everything, and our next auction will be in October when I return back to the United States.
And Harold, here's a bit of information for you. It's a bit of an anniversary because it was in August of 2005, and here we are at the beginning of August 2012. It was the beginning of August 2005. You originally wrote your report, Naturally Fancy Colored Diamonds, the Best Kept Secret.
Wow.
So here we go. Randy. Yes, time does fly, but we can verify through this report. I have a timestamp that, yes, indeed, you were the first one to bring us rare colored diamonds as an investment. And, of course, you were the first person to come up with a website to resell those diamonds and other collectibles, hsfineauctions.com. The other thing that Harold really stresses, and as he was mentioning it during his commentary, is quality. You need to buy quality, because if you don't, when you go to resell it, you may be in for an unfortunate surprise. Buy quality, deal with the person who has the best contacts in the industry, the number one website, the number one auction site, rarecoloreddiamonds.com, the website, telephone number 1-800-432-1022 to connect with Harold. The website is hsfineauctions.com for auctions. As he mentioned, auctions coming up in September. Go back and take a look at the past 7 auctions and the items that were auctioned off. It was a tremendous success, and be set for new auctions coming up in September. Speak with Harold as well about that featured diamond this week, a 1.23 round, brilliant cut, D flawless, white, internally flawless diamond. It is absolutely stunning. So to connect with Harold again, rarecoloreddiamonds.com, 1-800-432-1022, his other website, hsfineauctions.com. To invest in precious metals, the company Harold recommends is Worldwide Precious Metals. Their website, wwpmc.com, wwpmc.com. The telephone number, 1-866-623-2002. And they'll be happy to get you on the list for our free weekly newsletter. We send it out via email free of charge every week. You can spend 5 minutes, 10 minutes going through it. That's how we set it up. Or you can spend hours. And it's one of those newsletters that is a must-read. It's the companion to our radio show, and we encourage you to get your name on the list. One of the stories that came out this week was about the stock market, and I think that we should touch on it quickly because it was big news. The company was called Knight, and they actually really screwed up the stock market. Knight explores options on $440 million trade error loss. Knight Capital said losses from Wednesday's trading breakdown or $440 million, almost quadruple its 2011 net income and more than some analysts has estimated, and the firm is exploring strategic and financial alternatives. Its stock has, in a few days, lost approximately 66%. Now they're looking at merger options. Some of their traders are bailing. But, Harold, this is another reason, and we have about 3 minutes left in our show here. This is another reason people have to be careful of the stock market. 60 Minutes, and we touched on it. We had the information in our newsletter, talked about these high-frequency traders. And I think we had another story where they say now approximately the trading that goes on in the stock market is only about 16-17% actually done by humans. The rest of it is done by computers. And here we go, another computer glitch. Trading totally out of control on Wednesday morning cost this company close to $500 million. The flash crash in the stock market was never explained. And Harold, that's why we say when you're holding a gold coin in your hand, when you're holding silver in your hand, you're holding a diamond in your hand, whatever hard asset it may be, painting, collectible, whatever, there's no flash crash. There's no crazy computer. That's why we're advocating, beyond all the other things we talk about, inflation and the economy, to have hard assets, because the way things are going, it is totally out of control. The people that are setting up these computers, and they're trading at milliseconds trying to make money. To me, it's just absolutely insane.
It is, and it's going to destroy the marketplace. The small investor has no place in the stock market anymore. Again, it's all done by computer, and you have no chance. And all these hedge funds are looking to do is to pick up a couple points, and then they're gone. It's got nothing to do with technicals or fundamentals. It just absolutely is ruining the stock market, and there's no place for the small investor in the paper asset market anymore. That's where you're going to lose all of your money. Stick with the hard assets, especially for the next 5 to 10 years, something you hold in your hand and can put in your pocket. That's what's safe, that's where you need to invest, and that's what's going to make you all the money.
Well, Harold Siegel, thank you very much for another fantastic show. We wish everyone a great long weekend, and good luck to Team Canada.
You bet. The Olympics have been so exciting. I'm just so proud of Canada and some great sports going on. I just love the dreams and the hopes of these kids and how positive they are and what their parents have sacrificed to get them to this level. It's just everything good about the sports world is in the Olympics. And again, I just am glued to the TV. Thanks for listening to the show. I wish everybody a wonderful long weekend and a very profitable day.
Connect with Harold at rarecoloreddiamonds.com. If you've never spoken to him about diamonds, you've sort of sat on the sidelines, thought about it, well, now is the time to act. The telephone number to speak personally and privately with him, if you would prefer to do business over the phone, 1-800-432-1022, 1-800-432-1022, rarecoloreddiamonds.com. Check out the auction site, hsfineauctions.com. And we can't stress enough, when it comes to investing in precious metals, the only company Harold recommends is Worldwide Precious Metals. www.pmc.com, their telephone number 1-866-623-2002. They are the experts in this very specialized field. This is what they specialize in, nothing more, nothing less. They're going to help you start your own precious metals investment account and get you to the goals that you want to achieve financially. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.